Bitcoin isn't an investment, it's a savings account. Money is tight for many people, and when money is tight, people are going to sell what they can. Even when they believe in something, there are practicalities that come behind that. Mature investing doesn't look like absorbing blame for volatility. It looks like understanding that markets move in cycles, that no entry will ever be perfectly timed. Savings isn't really about excitement, it's about structure. Savings is not about trying to prove yourself right, it is about... Welcome to Rich and Regulated, where women learn to build wealth in alignment and flow. I'm Jessica Soul. For over a decade, I've helped women create the lives of their dreams, and here I'll share how I build wealth, fast-track results, and reveal money truths that will blow your mind. Let's get wealthy. So I want to get something straight with you today. Bitcoin isn't an investment, it's a savings account. And savings is something you should be building deliberately, and then you let it sit. And I think this is where the entire emotional tone of February got really misunderstood, because most people entered into Bitcoin through an investment lens. They entered through performance language, through upside projections, through price targets, and through conversations about how high could this go. And I want you to understand that that framing wires your nervous system for expectation. And at the end of the day, expectation will create tension. And tension reacts when reality doesn't behave as politely as we would like it to. But if you step back and you reframe Bitcoin, not as an investment strategy, but as a long-term intelligent savings, the entire relationship will shift. Because at the end of the day, savings isn't really about excitement, it's about structure. Savings is not about trying to prove yourself right, it is about storing energy for the future. And savings is often something you build quietly because you trust the architecture underneath it. And when I say architecture, I mean this in very human terms. At the end of the day, Bitcoin has a fixed supply. There will only ever be 21 million Bitcoin. That doesn't change because sentiment changes. It doesn't change because headlines get dramatic. And it doesn't change because February 2026 Bitcoin is in the red. It is simply a network that runs continuously, globally, without asking permission. And this is infrastructure. And infrastructure doesn't move in a straight line in terms of price, because adoption doesn't move in a straight line either. At the end of the day, human trust also does not move in a straight line. And when we talk about liquidity, which is just a fancy word for how much money is freely moving through a market at any given time, this is always going to be expanding and contracting. So when liquidity contracts, assets are going to feel pressure. And it doesn't mean they are broken. Because at the end of the day, money is tight for many people. And when money is tight, people are going to sell what they can. Even when they believe in something, there are practicalities that come behind that. And this is not just philosophical, this is practical. And understanding that will really change the internal experience you have when it comes to Bitcoin. And I just want to soften this because I'm speaking to women, and there are many women I know that were the ones in their family that said to buy. And I want you to know that I see you in this moment. I know what that moment feels like. I know what it feels like to research something deeply, to have conviction rising in your body, to finally move from observer to participant, and then to have the environment shift and the value of Bitcoin drop, right? There's a very specific vulnerability in being the one who initiated a decision, especially in a partnership, especially when you care about being seen as intelligent, and especially when you don't want to be seen as the risky one. So when price pulls back, the mind might say, it's just volatility, but the body is saying something else. The body says, am I safe? And that's not dramatic, ladies. That is just regulation. And regulation is the layer that most people never talk about in investing, because investing isn't just intellectual, it's also psychological. And if your nervous system doesn't feel safe holding something that is volatile, you will unconsciously sabotage your position just to relieve the tension. And what I mean by that, you may sell too early, you might over-adjust, you'll over-consume commentary that is not serving you, you'll look for someone to tell you what to do, and it's not because you're incapable, it's because your internal system is seeking relief. And this is why position sizing matters so much more than people realize. And what I mean by that is that it's not about maximizing upside, it's about allocating in a way that your body and your nervous system can tolerate. And so if you allocate 80% of your available capital into something volatile and you haven't built the literacy or the regulation to hold that level of exposure, of course, your nervous system will revolt. And when your nervous system revolts, your logic might disappear. And so part of what February is showing for many women is not at all whether Bitcoin works, it's whether their exposure matches their embodiment. And this is a really different question. And I want you to know that inside of my free Crypto for Women community, this is a layer that we've been sitting with, not with the hype, not with the panic. What we've been doing instead is unpacking how much you hold relative to how much you understand. We've been unpacking what it actually means to treat Bitcoin as a long-term savings instead of an asset that is just based on performance. And we've been unpacking what real literacy looks like. Because at the end of the day, literacy builds calm, and calm builds longevity. So when you deeply understand what you own, volatility doesn't disappear, but it becomes contextual, and you don't need the market to behave a certain way in order to feel intelligent. You don't need green candles to feel validated. You don't need to defend yourself at dinner. Instead, you become quieter, more measured, more deliberate. And that quiet steadiness is powerful. Just quickly, guys, if you're a woman who's earning well but still feels like your money isn't working for you, I can help. My Build Your Wealth portal is the perfect place to begin, and for less than $100 a month, I'll teach you the exact groundwork that has allowed me to create freedom for my family. Just hit the link in the show notes to connect into my community today. Now back to the episode. For some women, the discomfort of February isn't about misunderstanding the asset that they own. It's about carrying too much responsibility. And when you're the one who may have said to buy, you may feel like you're the one carrying the emotional weight of that decision for everyone else involved. And I understand that at times that can feel really heavy. But mature investing doesn't look like absorbing blame for volatility. It looks like understanding that markets move in cycles, that no entry will ever be perfectly timed, and that long-term positioning is built over years, not weeks. So if your time horizon is truly 5 to 10 years, February 2026 is just noise. But if your time horizon was secretly a 5 to 10 week turnaround, then of course, this dip with Bitcoin is going to feel catastrophic. And that realization isn't something to shame yourself for. It's something to refine. And if you're listening to this and you're feeling that gap between what you intended and what you've embodied, that's not a verdict. It's just an invitation to deepen your literacy so that your confidence no longer depends on short-term reinforcement. And for some of you, that deepening can happen inside of my free community. This is where we sit in conversations, you can ask questions, learn the structure, understand custody, liquidity, cycles, and savings philosophy. And for others, you might feel that you don't just want free information. You might want an architecture. You want someone to talk with while you're building a real wealth framework that integrates Bitcoin properly into a broader strategy. And that's where my mentorship lives. But regardless of which layer you're at, the work is the same. At the end of the day, it's moving from borrowed conviction to an embodied understanding. It's moving from excitement to steadiness, and from hoping the market behaves itself politely to understanding why it behaves the way it does. And so here's what I want to leave with you. February hasn't exposed whether Bitcoin is valid. It has exposed whether your internal system is calibrated to hold something that does not offer daily reassurance. And that calibration is not personality, it is built through repetition, through education, and through choosing to stay present with discomfort long enough for it to lose its charge. And so if you were the woman who said to buy, if you're feeling the weight of that this month, I do not want you to shrink. I want you to mature. Not in a hard way, but more so in a grounded way. Let this dip and this month of February refine you. Let it deepen your understanding. Let it show you where you still need a little bit more structure. Because wealth is not built in the moments where everything is rising and everyone agrees with you. It is built in the moments where the environment wobbles and where you remain steady anyway. And at the end of the day, steadiness is learnable, and that is the real work. If you've gotten value from today's episode, make sure you subscribe and leave a 5-star review. And if you're ready for more support in building regulated wealth strategies, check out the link in the show notes. Have a beautiful day.